Positive territory. We had been on a nice little rally. Joining us now for the details on what we're looking at and where we could be headed, Alan Nuckman, the Chief Market Strategist at Agora Financial. Good to see you, Alan.
Good afternoon.
I felt like as we started the trading day today, we were searching for direction. Of course, no better place to look for it than from Fed Chair Jerome Powell. And the market seemed to be reacting in real time to everything he had to say. And then when he finished talking, we pretty much ended back where we were.
Yeah, you've got to look at the bigger picture here. I don't know if that had much impact in the markets here today. We're in a strong little mini trend here. After that low we made in Christmas just a few sessions ago, we've gone up 10% in the major markets. So it's been quite a recovery rally here. We're green in 2019. And it's interesting now because we're at some critical levels now that we've had this big bounce. 24,000 in the Dow, and if you want to look at the broader market as I do, 2,600 is a critical level that we need to get back above and back inside that sideways trend that we traded in for most of 2018.
All right, there's the key question right there. After the bruising that we took near the end of 2018, investors want this to be over. They want to start making some money again. You sound optimistic.
Yeah, I remain very optimistic. Nothing changed fundamentally. I saw a major unwind, but if you look at it, as painful as it's felt, essentially we gave back the gains. 2018, the markets were minimally down on the year when it was all said and done. There are a lot of positive things happening right now. We're going to get back to fundamentals next week and start focusing on earnings, which truly drive the market, and less about politics and policy in these walls of worry that we have to overcome. But a couple of positive things. The dollar index just made new 3-month lows last night. We're back below 20 for the first time in more than a month on a closing basis in the VIX. So those can both be viewed as bullish indicators.
Now, when we take a look at the earnings and the expectations that we're having there, we're hearing for some retailers that didn't do perhaps as good as we had hoped over the holiday season. Now, is that about the U.S. consumer, or is that simply about the challenges that brick and mortar retail have in this environment?
I think it's a combination. You had a healthy rally in a lot of retailers that have beaten up, so much in the past couple of years. But last year they seemed to perform rather well, as most of them have made the transition to their online sales. So a little bit of profit taking after the Macy's announcement here today across the board. So I don't think it's going to hurt everybody, but it just hurt the sentiment on one day. So let's see how that recovers from here. But I don't know if that's a very fair barometer of the markets in general. I think the markets were very much overdone on the global growth slowing worries, and we saw in crude oil as well. Crude oil has a 9th consecutive positive close in a row. So you're seeing very much the stock market and the energy market, the crude oil market, very much move in tandem with this big bounce off that bottom.
What are you seeing in the tech names right now? I mean, Apple was first out of the gate in 2019 to give us some dire words about the iPhone and pointing the finger at China. What do you think tech can do for us in 2019?
I haven't given up on tech. Tech is not a wreck. You've got to remember that we've come so far, over the last few years, over the last decade, actually, that obviously a pullback and some unwinding and some profit taking was much needed. Now, people have been waiting for a break to get into a lot of these stocks that they really like, but the question is, will they step up now and do that when you see, the Facebooks, the Apples, a lot of these stocks at a major discount? And looking at that market, over the last 2 years, tech is still up 28% if you look at the NASDAQ 100, the top 100 stocks in tech. So if you average that out, I'm not good with math, but that's still 14% return a year. So to say that it's over, I think, is getting a little bit overly aggressive on this turn in the markets. Let's see if this is opportunity. Like we've seen every single time in history so far, every sell-off has bounced back and made new highs.
Now, the oil trade has been an interesting one so far. We're very early into 2019, but we've seen some nice gains. Do you think we can hold that and build on that?
Well, I think there's a combination of forces. Obviously, you have Saudi Arabia, America, and Russia are the big three players in the oil market. And things have gotten a little bit more dynamic as we try and sort out who's interested in what. So looking at the price, which is my focus, in the big picture, crude oil traded between $40 and $60 for 3 years, 2014, 15, 16, I guess it's 4 years, and 17. 2018 was a breakout above that $60 level, and now we've moved back down below it, and we're trading within that sideways range once again. against. So let's look to see how this recovery continues. Back above $50 is rather significant psychologically, and 60 is kind of the halfway point of this recent fall. So I think the market, just like the stock market, in my opinion, is things got overdone on the downside, and let's see how this recovery sustains itself. This is the first leg higher, so I'm not expecting a straight up move, but I view this as a positive that the markets are behaving in this way as we get started. 2019 really just has started officially last week with the full trading week that we saw in our action.
Now, when it comes to volatility, for a long while there, we didn't have any, so we weren't watching the VIX. What should we be watching in the VIX now?
Right. Well, like I said, I think the 20 level is a very important psychological pivot above and below. But let's remember, we have that high that we saw when the S&P made new lows in December. The VIX was nowhere near the annual high. It got as high as 36, but the previous high was 50 back in February when we saw that VIX explosion. So that's bullish divergence right there. So we made new lows in the stock market, but not new highs in the VIX. That portends usually a very, very positive price action in the future. And looking at it, we're already 45% off of those highs from just a few sessions ago. So as we've seen many, many times before, the VIX pops itself back up and gets whacked down. And if you look at a historical chart over the last 5-8 years, every time we've popped to the upside, it's been beaten back down, and we continue to drift lower and see a series of lower highs in volatility.
All right, Alan, as always, thanks for your time and for your insight.
Thank you very much.
That was Alan Nuckman, the Chief Market Strategist at Agora.